issue this vote is whether or not the Senate should proceed to debate legislation that I've authored with Senator Schumer and others dealing with the currency exchange practices of the communist dictatorship of China. I've been involved in this now for almost 7 years. We've done a sense of the Senate resolution back in 2004, I believe it was, urging the Chinese to change their currency policy. What does this mean to the average American? The exchange rate today is 6.38 yuan to the dollar. Now, when you look at the dollar to the euro, I don't know what it's trading today, but it goes up and down every day. China's economy is growing at 9 and 10%. They're the second largest economy in the world. They're moving like gangbusters. And does it really matter for them to suppress the value of the currency? Yes, it does. And any objective observer looking at the history of the way the Chinese government deals with their monetary policy would conclude that they keep the yuan below its true value to create a discount on products made in China. Look at it this way. If you're competing with China in the world marketplace, it's one thing to have cheap labor to compete against. It's another thing to have the government of China directly supporting their industries in a way we don't hear. But when you add intellectual property theft, you do business in China, the next thing you know, a Chinese company across the street is producing the very product you went to China to produce. So the Chinese government needs to follow the rule of law and live within the norms of the international business practices. And when it comes to currency manipulation, it is just impossible to believe that the dollar to yuan ratio exists without the government manipulating the value of the yuan. People estimate that it's 25 to 40% below its true value. Now, what does that mean? That means if you're competing with China selling the same product made in China, there's a discount on the Chinese product based on the value of their money. And the trade deficit with China has exploded. Last year, it was $273 billion. We're at $160.4 in July of this year. And cheap exports coming out of China is a source of cash for the Chinese government and Chinese industry. You can't convert the currency in China. In the United States, you can take your money and convert it to any currency you would like. If a Chinese manufacturer sells a product in the United States and they get paid in dollars, they have to convert it to the yuan. They have very restrictive monetary policies, and the ban of trading on the yuan is 0.5% a day. The dollar can fluctuate based on all kinds of economic forces, our debt, our trade deficit, what's going on here at home, but the Chinese government restricts the value, the fluctuation of the currency in a way that costs us jobs. It's estimated that over 2 million jobs have been lost over the last decade because of currency manipulation alone. It is one way to get an unfair advantage in the marketplace. Over 41,000 jobs have been lost in South Carolina alone because companies can't compete with China. So this legislation would allow the Treasury Department to create new criteria to monitor the currency practices of the Chinese government. And if it is found to be misaligned or manipulated, the Treasury Department can bring countervailing duty proposals, countervailing duty action against China. We've done this before when the Chinese dump steel into our market. If a country is violating the international trading standards or business norms, we have under the WTO the ability to fight back. And what this legislation would do is it would elevate currency manipulation. It's one thing to dump a product like steel or tires into the American economy, creating an unfair advantage for the Chinese manufacturing community. We have tools to deal with that, but we haven't embraced pushing back against currency. Now, China should be a great place to do business, but it's not. It should be more balanced than it is. I want to do business with China. I just don't want trade deficits of $273 billion that are artificially created. If they do something better than us, they should win in the marketplace. That's just the way business works. But if the government intervenes and creates an advantage for a Chinese company, that's not winning in the marketplace. And this one would not matter if it were a country like the Dominican Republic or some small country where they have to keep the currency in check because you don't want wild swings of your currency. But when you're a major economic power like China, like the United States, like European countries, you can't play that game. So I hope my colleagues will vote to allow this debate to go forward, because this is about American jobs at the end of the day. So with that, I yield back and notice the absence of a quorum.